Hi, it's Frank Lehane at Wellspring Wealth Coaching, LLC. I want to thank you for joining me on this audio. If you're listening to this audio, chances are you're ready to discover a whole other way of investing you haven't heard of yet, and you'd really love to change your investment strategy for stress-free investing. If this sounds like you are definitely in the right place. I want to thank you for listening to this audio because there are many choices in how to solve the problem of investing. So to show you some appreciation, I have a few gifts for you. The first gift is a downloadable ebook of Mark Matson's Investor Awareness Guide. Now, if you don't know who Mark Matson is, he's the financial advisor who has his own TV show called Matson Money. This ebook is a 22-page, comprehensive, yet simple guide to stress-free investing with great content and high value. I highly recommend it. Even as a seasoned financial advisor, I was able to gain tremendous insight. You definitely don't want to miss this one. All you have to do to receive your copy is get to the end of Lesson 7 and follow the download instructions. The second gift is my free email newsletter that comes once a month. Okay, so here is the 7-part mini-series you requested entitled Investor Health Lessons. 7 free lessons on how to invest stress-free that even the guru brokers don't know or won't tell you. Before we begin, let's get organized. Do you have your 3-ring binder? Did you print out the lessons? Are you ready with your notepad? So if you have a question at any time, you can write it down and shoot me an email at frank@franklahane.com, and I'd be happy to answer that. Okay, so a little housekeeping first. Before we get on to the lesson, allow me to read our disclaimer. Wellspring Wealth Coaching, LLC is a California registered investment advisor registered with the Securities and Exchange Commission. All materials presented are intended for informational purposes only and not as investment advice or as an offer or solicitation to buy or sell any investment products or securities. Past performance is not indicative of future results. Investing involves risk, potential tax implications, and the possibility of financial loss. Investment risk is the responsibility of the individual. Now, on to the lesson. Well, I hope day 3 went well for you. Welcome to day 4, entitled True Diversification Means Owning the Whole Market. Well, here we are at day 4. I'm not sure if you have or haven't submitted any feedback regarding your thoughts on the free test drive investment health lesson series so far. You can understand why I might be in the dark on this. You see, I wrote this information-packed series a while ago, and occasionally I update the lesson plan as more current and relevant information comes my way. Basically, I need your feedback. So since we are midway through our lesson plan, I thought I might remind you that there really is a person behind the email. This is not to put any pressure on you at all. It's just that some people are more comfortable with humanizing the process, and I happen to be one of them. So if you still haven't had the chance to comment on these lessons, please feel free to email me directly at frank@franklahane.com. Oh, and don't forget to include a phone number. This way I can reconnect with you. Now, before digging into day 4, I wanted to share with you some experiences concerning the subject and why I chose to do a lesson plan on the topic of diversification. Looking back to my days as a commission-based advisor, I, along with my colleagues, thought we had a pretty good grasp of the concept of diversification. We thought that it was the clients who had an incomplete or erroneous idea of what it was. Whenever we asked clients what it meant to be diversified, the majority answered, well, to own lots of investments and lots of things. This sounded like it made sense, right? Don't put all your eggs in one basket, the client had often heard us say. Well, we were both wrong, or at best, only partly right. I needed to get very clear about this concept once and for all. I soon realized that the traditional advisor and broker had abandoned the duty of diversifying clients' money to pie charts, biased questionnaires, the hands of guru money managers, and products containing mind-boggling arrays of stuff. Once I understood the importance of true diversification, I found out I could really help investors capture market returns while at the same time teaching them to recognize and avoid the layers of unnecessary fees, expenses, and commissions digging into and eroding their wealth. So, let's get into day 4. Many investors think they have true diversification in their investment portfolios. But if you take a closer look, you'll find quite the opposite is going on in there. Ask the average investor if they're diversified, and they'll often say, "Sure I am. After all, haven't we all heard, don't put all your eggs in one basket?" Investors will even tell you that they understand the importance of spreading their investments across several areas of the market. Evidence, however, reveals something much to the opposite. Many investors claiming to understand diversification actually demonstrate that they merely own a bunch of stuff. Some stocks, a few bonds, a mutual fund, a life insurance policy, maybe a CD or two. I can tell you that this is not the true definition of diversification. True diversification, in layman's terms, means owning a mix of all asset classes representing the entire global market. For example, a lot of investors believe that because they have most of their investments in the S&P 500 market index, they're diversified. In fact, investors in this situation are under-diversified. They're missing out on a lot. Diversification is not about being limited to only one or two market sectors. Unfortunately, for investors, many planners and brokers keep them stuck in this mindset of investing in one or two sectors only and getting them to think that they're actually diversified. Well, they're not. Whole other market sectors are still out there, untouched. Owning a couple of market sectors and neglecting whole other market sectors can be financially harmful because of the missed returns to the investor. You can't benefit from a market you're not in. Make sure you own the whole market to be fully diversified. So what's the lesson key? Now that you understand what true diversification is, why do you need to be fully diversified if you're already making a rate of return? What this means is, in spite of what you're already earning, you're left with having to overcome the layers of fees, expenses, and commissions, which have a serious eroding effect on your investment earnings, plus all the missed potential returns to you from those untapped market sectors. Here's the tip for you. Partner up with an investor coach or strategist who is willing and able to help you find a fully diversified investment portfolio that you can live with. If you have any questions about how to attain stress-free investing, shoot me a question or go to my website at www.franklahane.com or email me at frank@franklahane.com. To your success. Now on to day 5. Where we'll discuss how stress-free investors have a financial GPS. See you then.